So in the watch markets currently, there's quite a bit of changes occurring. The first one being that you're going to start to notice a significant amount of supply shortage across the board getting worse in 2022. Secondly, you're going to start to notice a significantly higher amount of people getting into this game in 2022. So this creates a very interesting dynamic. More people wanting to play, less inventory to play with, which means ultimately what happens when you get a lot of demand and very little supply? Prices must go up. Hey guys, my name is Pejman Ghadimi and I am back with you here on Watch Trading Academy to talk about the watch markets and what has been going on. You see, in the world of watches, if you've been watching our channel, following us at Watch Trading Academy, or actually participating in our community, learning to trade and invest in watches, then you already know that the watch markets are on fire. From literally Kevin O'Leary going to Bill Maher and telling him on stage that watches have been his best asset class investment and they are going up like crazy, to day-to-day people becoming watch traders and watch investors just by walking into 80s and getting their brand new watches that are worth twice what they're paying today. So you might be wondering and asking yourself, what is happening? Is it going to be sustainable? And are prices coming down anytime soon? So in order to understand that, we have to understand that the supply and demand economics are significantly different than they were years ago. You have an influx of demand coming in from new investors, new users, right? People who can afford these watches because they made good money during this pandemic. And then you're also getting a shortage of supply with less and less manufacture happening. So when you add the two, you obviously have a formula for economics showing that you're going to have a price increase across the board, right? This is basic supply and demand. But there is something real that people aren't just talking about, and it's the idea of prestige. You see, prestige is something that always mattered to people who wear these high dollar watches because they are a symbol of status, right? We don't walk around with $200,000-$300,000 on our wrist because we're trying to read the time, or that I'm concerned that this perpetual clock is going to keep track of the 31st day of the month or not. Actually, as a matter of fact, I could care less because I wear this in rotation with 30 other watches, and as a result, the clock will never be right because it doesn't keep running forever. So if you've ever questioned or been wondering, why do people wear these watches? Well, the common denominator is that it is a way men basically show off their wealth. If you think about it, it's a status symbol. When you wear a $2 million watch, it does not tell the time any better than a 30-cent, like Apple Watch that they made in China that probably is actually more accurate to the second than any complicated Richard Mille or Patek watch. So, if it's about status, then why are prices going up so much? Well, because we are in what we call the biggest dick contest move. You see, basically, the simplicity of explaining this in a way that you understand it is that in the past, when I said the past 4 years ago, if you were rich, you were wearing a $30,000 to $40,000 Rolex or AP watch. That was what you did when you had good money. And if you were ultra rich, you were wearing a $100,000 to a $200,000 watch. Or you could say super rich past that. You had a collection of $200K watches with some as high as $500,000, which was pretty exciting at the time to be able to wear that and make a statement when you walked in a room. I'm richer than you. That was the only statement you needed to make. In our industry, even in watch shows, people wear their best pieces because it's an indication of their buying power, meaning it actually shows you what you're capable of. It's like walking around with a black Amex card. Like, think about it. That black Amex is in your wallet, not on your wrist. It cannot be seen. And more importantly, it is only used, but it doesn't really give you an advantage greater than a regular platinum Amex. But yet, why do people pay $5,000 a year in fees plus in order to have one? Well, the answer is quite simple. They do that simply because it's a matter of communicating your status when you pull out your credit card to purchase. And while it is or could be labeled as a convenience because it does not have a limit, which it does have a ghost limit, it does not have a big limit that is therefore shown or shadowed here. What it does have more than anything else, right, is the idea that you are richer than the person next to you and therefore you're taking out your card. Because while it does give you some access to additional spending limits, the reality is my Amex spending limit is $1 million a month. And you know why? Because I made one phone call and verified my account. So the question is, are you going to spend over $1 million every single month? Well, the majority of the world, including the ultra-rich, would tell you no. And so there is really no greater benefit than showing who is the biggest dick contest to wearing a black card versus a platinum. Really none whatsoever. Now, again, now let's go back to this watch game and understand it a little bit better. Now, if 100,000 back then was ultra rich, well, if everybody else has 100,000, then ultra rich needs to be 500,000. So things have to change, right? Now, think about just deflation of currency on the very simple basis, very simple basis that money factors are up, meaning inflation is kicking in, and you basically printed the last, 40% of the paper circulating in the US has been printed over the last 12 months. So if you think about that, you basically go that the value of your dollar is 40% less now. So that in itself is playing a significantly larger role than people think, because when you devalue your currency and watches are a hedge against inflation, they typically go up because you're holding watches, so it's an asset. So if you're holding the watch, if it's like, I'll give you a really good example of this because this happens with homes too. This is one of my arguments why I try to tell as many people as I can that they need to become watch investors and use Watch Trading Academy to learn how to do that. And if you don't know how to do it, you can watch the free training by clicking the link in the description. It'll take you to a free training to see if watch investing is for you. But one of the things that I try to make people understand when it comes to wealth is that poor people are poor because they don't own things. Rich people are rich because they own things. Now, you can look at that in the basis of property. We've seen real estate property values skyrocket over the last 12 months. Now, we might be wondering, well, okay, there's a lot of migration in certain places. Yes, but across the board, real estate is up. Now, why is that? Because real estate is also a hedge against inflation. When you devalue the currency, well, the asset has to establish itself at the new cost of that currency. So in other words, what was $1 million now costs $1.4 million, and the asset is going to go up to offset that. Now, if you are a homeowner or a watch owner or a Ferrari owner at the time this inflation is occurring, then what happens is the asset you're holding is also going up, right? So while the cost of new assets go up because it's now more money to buy the same watch, this used to cost $150, now it costs $200, it's going to cost $300 later, but the point is that $150 to $200 matters even if you're a consumer, because you now have to pay $50K more to buy the same item, and it doesn't serve a better purpose because it costs more. The only difference, though, is that if you currently hold an asset, then you're making money while you're spending more money. So the offset goes up together. You sell your current item for $50K more, you buy another one for $50K more. So yeah, you didn't really make money, but you also didn't lose money. You just laterally transferred the money from one asset to the other. And this is the same for a home. If you own a home and it's $1 million, then it becomes worth $3 million. And now the next home you wanted to buy was $3 million, but now it's $5 million. Well, technically, you didn't make or lose anything, and you can still make that transition. So in other words, wealth creates wealth, or wealth retains wealth. But poverty is basically the opposite of that, is not owning any assets. So basically, let's say you have $1 million in cash and you don't hold anything. Well, that's a losing proposition, because if you don't have property, like if you don't have assets, then these assets don't become worth more. So what happens is your cash devalues and your buying power devalues. So now you want to buy that same $5 million house. Well, you have to pay $2 million more of your money to basically purchase that home, versus you would have made $2 million more in your home and could have used the same amount of money to purchase the home that you have always dreamed of. The idea is that while assets go up, rich people stay richer or get richer because their assets go up too, and basically they're a hedge against the inflation they're encountering or feeling out there, right? If you're buying a Ferrari and that Ferrari costs 200 grand, now costs 300 grand, well, you're losing $100,000. If you would have taken action earlier, you wouldn't have, but now you are. However, if you were holding a Ferrari and that Ferrari is also up 100,000, by selling that Ferrari and buying the other one, you've basically gone back to the same exact point of economics, because it's the same difference because one has gone up. Now, there are little basically supply and demand curves that are going to change what goes up more or less. But at the end of the day, your asset went up, you bought a higher dollar asset. And so it's so important to understand that watches are basically a hedge against inflation. So it makes sense for those values to go up. So a big part of what's risen the watch markets is that what was once exclusive as 150 is equally exclusive now. It just costs 500,000. And this is the key part people don't understand. They keep thinking that there are bubbles happening within watch brands. Like they come across and they go, well, okay, Richard Mille was 150,000 a watch. Now it's 400K for the same watch. Well, yeah, because the price of exclusivity is the price that's gone up, not the price of the watch. So the watch remains the same watch at the same dollar, but the exclusivity now warrants a higher payment for entry. Well, there you have it. That's my take on the market, what's happening, and what you need to be paying attention to. For more information like that, of course, please press like, turn on notifications, and of course, subscribe. And tell me what you think. Do you think the price of exclusivity is now stable, or do you think the price of exclusivity has hit its peak? So let me know in the comments, and I'll catch you on the next episode for Watch Trading Academy.